Get ready, because the pace of innovation is absolutely relentless, and here at Qualcomm Pulse, we're your front row seat to the biggest stories shaping our world. The news cycle is spinning faster than ever, and if you miss a beat, you might just miss the next massive wave. That's why we're here to break down the must-know updates that are making headlines and moving markets. We've got a packed show today, diving deep into the stories that everyone is talking about, the ones that are defining the future right before our eyes. We're about to unpack the critical developments you need to know to stay ahead of the curve. From groundbreaking tech announcements to significant market shifts, we're covering it all with the energy and insight you expect. Don't get left behind, stay plugged in with Qualcomm Pulse. So buckle up, because this is where the future unfolds, and you're invited to witness it all as it happens. We're about to unpack the critical developments you need to know to stay ahead of the curve. You won't want to miss a single second of this critical briefing. So buckle up, because this is where the future unfolds, and you're invited to witness it all as it happens. You won't want to miss a single second of this critical briefing. Make sure you're subscribed and have that notification bell on so you never miss an update. The AI arms race heats up. In the relentless pursuit of technological supremacy, the spotlight is firmly fixed on Nvidia, a titan whose performance has become a bellwether for the entire artificial intelligence industry. Today, all eyes are on Nvidia as Wall Street eagerly awaits its latest earnings report. This release isn't just about numbers. It's a crucial barometer for the health and trajectory of the AI-driven market rally that has captivated global attention. Nvidia's stock has seen an astonishing surge, climbing an incredible 171% in the past year alone, a testament to the explosive demand for its cutting-edge AI chips. This demand is primarily fueled by the massive investments from tech giants like Microsoft, Google, and Amazon, who are pouring billions into data centers to power the next generation of AI applications. Investors are scrutinizing every detail of this report, seeking confirmation that this powerful growth momentum is not only sustained, but accelerating. The company's data center revenue, the engine of this remarkable growth, is under particular intense focus. Any indication of a slowdown or a shift in this critical segment could send ripples across the market. Beyond the core AI hardware, Nvidia's strategic moves into new frontiers are also drawing significant attention. The recent unveiling of its new robotics chip, the Jetson AGX Thor, signals a bold expansion strategy. CEO Jensen Huang himself has declared robotics as the company's next major growth frontier, even surpassing AI in its long-term potential. While robotics currently represents a minuscule fraction of Nvidia's revenue, forward-thinking analysts and investors are already positioning it as the encore to the data center's current success, predicting it could become a substantial revenue driver in the coming years. This diversification and expansion into adjacent, high-growth markets underscore Nvidia's ambition to maintain its dominant position and shape the future of technology. Analysts are keenly watching for any guidance on the company's outlook, particularly concerning the impact of new U.S. export controls on sales to China. Nvidia had previously warned that these restrictions could result in an $8 billion hit to quarterly revenue. However, a recent development, a revised deal allowing some sales to China with a 15% tariff, introduces a new layer of complexity and potential opportunity. The market will be dissecting the company's forward-looking statements for clarity on how these geopolitical factors will shape future revenue streams and profitability, knowing that any misstep or unexpected development could significantly sway investor sentiment and the stock's valuation. The consensus among analysts remains overwhelmingly positive, with many raising their price targets, reflecting a strong conviction in Nvidia's ability to navigate these challenges and continue its impressive growth trajectory. The anticipation surrounding this report is palpable, as it promises to offer critical insights into the forces driving the AI revolution and the future prospects of one of its most influential players. Hold on tight, because the numbers are in, and they tell a complex story of soaring demand battling regulatory headwinds. Next up, we break down exactly what this means for your investments and the broader tech landscape. Nvidia navigates earnings seas. Revenue soars despite miss. In a market hyper-focused on the artificial intelligence revolution, Nvidia's latest earnings report has landed, presenting a nuanced picture of growth and challenges. While the company narrowly missed earnings per share expectations, its revenue figures painted a dramatically different and overwhelmingly positive story, surging by an impressive 69.2% year-over-year. This robust revenue growth underscores the insatiable demand for Nvidia's advanced semiconductor technology, particularly its data center GPUs, which are the backbone of modern AI infrastructure. The company's performance is a critical indicator for the broader tech sector, reflecting the ongoing investment spree by major cloud providers and enterprises seeking to build out their AI capabilities. The figures released today reveal that the company's data center segment continues to be the primary growth engine, driven by the insatiable appetite for AI training and inference chips from hyperscale customers like Amazon, Microsoft, and Google. This sustained demand highlights the critical role Nvidia plays in enabling the current AI boom. Despite the slight miss on the bottom line, the overwhelming revenue beat has reassured investors and analysts about the company's top-line momentum. The market's reaction suggests a strong focus on the top-line growth and future potential, with the revenue surge seen as a more significant indicator of the company's market position and the demand for its products. However, the report also touched upon the ongoing complexities of the global supply chain and geopolitical factors that could influence future performance. Specifically, the impact of U.S. export restrictions on sales to China remains a significant point of discussion. Nvidia had previously flagged potential revenue impacts from these curbs, but recent adjustments and new product designs tailored for compliance have offered a path forward. Investors are closely examining the company's guidance for the upcoming quarter, seeking clarity on how these regulatory landscapes will shape future revenue streams and profitability. The company's ability to adapt and innovate within these evolving trade policies will be crucial for maintaining its growth trajectory. Furthermore, the report offered glimpses into Nvidia's diversification efforts beyond core AI chips. The ongoing development and potential of its robotics division, spearheaded by the Jetson AGX Thor platform, are being closely watched as a potential long-term growth driver. While still a nascent segment, the strategic importance of robotics as the next big thing after AI is not lost on market watchers. The consensus among industry analysts is that while the slight earnings miss might attract some short-term scrutiny, the overwhelming revenue growth and the company's dominant position in the AI hardware market provide a strong foundation for continued success. The narrative remains one of robust demand and strategic expansion, positioning Nvidia as a key player in the ongoing technological transformation. While the numbers show a powerful surge, the market's reaction is always a dynamic thing. Stick around as we dive into what this financial performance means for the wider tech ecosystem and your investments. Nvidia's earnings, a tale of two halves with strong revenue momentum. Nvidia, the undisputed powerhouse of the artificial intelligence hardware sector, has once again captured the market's attention with its latest earnings report. The results presented a compelling narrative. While the company experienced a slight miss on earnings per share, its revenue figures demonstrated a phenomenal surge of 69.2% year-over-year, painting a picture of robust demand and expanding market share. This significant revenue growth is a direct reflection of the escalating global demand for advanced AI chips, particularly the GPUs that power data centers and accelerate machine learning workloads. The company's data center segment, the engine of its recent success, continues to be the primary driver, fueled by substantial investments from major cloud service providers and enterprise clients looking to build out their AI infrastructure. These clients, including tech giants like Microsoft, Google, and Amazon, are consistently increasing their spending on the high-performance computing power that Nvidia provides, solidifying its position as a critical enabler of the AI revolution. The impressive revenue performance signals that Nvidia is effectively capitalizing on the AI boom, translating high demand into tangible financial results. Investors and analysts are closely watching these top-line numbers as a key indicator of the company's market leadership and its ability to meet the burgeoning needs of the AI ecosystem. Beyond the core data center business, Nvidia is also strategically positioning itself for future growth in emerging sectors. The recent introduction of its Jetson AGX Thor robotics chip highlights the company's ambitions to expand its reach into new markets. CEO Jensen Huang has articulated a vision where robotics could become an even larger opportunity than AI itself in the long term, signaling a significant strategic pivot. Although robotics currently represents a small fraction of Nvidia's overall revenue, its potential as a future growth catalyst is widely acknowledged, with some analysts referring to it as the encore performance to the current AI data center success. This diversification strategy is crucial for maintaining Nvidia's competitive edge and ensuring sustained growth in an ever-evolving technological landscape. The company's performance also comes amidst ongoing discussions about global trade policies and their impact on the semiconductor industry. U.S. export controls, particularly concerning sales to China, have been a point of concern, with Nvidia having previously warned of potential revenue impacts. However, recent developments, including revised export rules and the possibility of selling modified chips, suggest a path toward navigating these complexities. Investors are keenly analyzing the company's forward-looking guidance for insights into how these geopolitical factors will influence future revenue and market access. The market's reaction to the earnings report has been largely positive, with the strong revenue beat overshadowing the slight earnings miss. This sentiment reflects a broader confidence in Nvidia's fundamental business strength, its dominant market position in AI hardware, and its strategic vision for future growth across multiple technological frontiers. The company's ability to consistently deliver on revenue growth, even amidst complex market dynamics, reinforces its status as a key player shaping the future of technology. So, the revenue is up, but what does that really mean for the players in this high-stakes game? Let's tune in to see how this impacts the broader market and what it signals for future tech developments. All eyes on Nvidia, earnings report set to define AI market trajectory. Wall Street's attention is laser-focused on Nvidia today as the company prepares to release its second quarter earnings report after market close on Wednesday, August 27. This release is widely regarded as a pivotal moment, not just for Nvidia, but for the entire AI-driven market rally that has dominated headlines and investor sentiment. Nvidia's stock has already experienced a remarkable surge, gaining an impressive 171% in 2024 alone, a trajectory directly linked to the unprecedented demand for its specialized AI chips. This demand is predominantly driven by the massive infrastructure investments made by major cloud providers and tech giants such as Microsoft, Google, and Amazon. These companies are investing billions in data centers to power the computationally intensive tasks required for artificial intelligence development and deployment, directly fueling Nvidia's explosive growth. Investors are eagerly anticipating concrete signs that this powerful momentum is not only continuing but potentially accelerating. The key focus areas for analysts and investors include the performance of Nvidia's data center revenue segment, which has been the primary engine of its success. Any indication of a slowdown or a shift in this critical area could have significant implications for the broader market. Furthermore, the report will provide crucial insights into the impact of evolving U.S. export control policies on Nvidia's business, particularly its sales to China. Nvidia had previously estimated that these new regulations could cost the company as much as $8 billion in quarterly revenue. However, a recent development, a revised deal that permits Nvidia to resume certain sales to China with a 15% tariff, introduces a new dynamic. Investors will be meticulously scrutinizing the company's forward-looking guidance for clarity on how these geopolitical factors and trade regulations will affect future revenue streams and profitability. Any definitive statements or projections regarding China sales will likely have a substantial impact on the stock price and overall market sentiment. Beyond its core AI hardware business, Nvidia is also making strategic moves into new growth areas, notably robotics. The recent announcement of its new robotics chip, the Jetson AGX Thor, underscores this expansion strategy. CEO Jensen Huang has identified robotics as potentially the company's largest growth opportunity, even surpassing AI in the long term. While robotics currently accounts for less than 1% of Nvidia's revenue, some industry observers and venture capitalists, like Gene Munster, believe investors are overlooking its significant future potential, calling it the data center's encore. This diversification into robotics could represent a significant future revenue driver, further bolstering Nvidia's growth prospects. Analyst sentiment heading into the earnings release is overwhelmingly bullish, with many firms raising their price targets. For example, Evercore ISI recently increased its target to $214, and Baird followed suit with a higher target of $225. The consensus price target among 40 analysts hovers around $200, reflecting strong expert confidence in Nvidia's ability to deliver another robust quarter and navigate the current market complexities. So the numbers are out, and the market is reacting. What does this mean for the future of AI and your investments? We'll break it all down right after this. And that's a wrap on today's essential updates. We've seen Nvidia's earnings report reveal soaring revenue driven by AI demand, navigate geopolitical challenges impacting sales, and signal ambitious expansion into robotics. Stay informed, stay ahead, subscribe to Qualcomm Pulse for your daily dose of what's next.